Now it's time for our retirement segment brought to you by Fidelity Investments. We're always discussing ways to save up and make sure we hit our retirement goals. But what if you've done all the hard work and you are happily retired? Does that mean you are done? Joining us now is Smartasset's VP of Content and Financial Education, A.J. Smith. So I want to make sure I understand this, because when we teased it, it was like, you still have to save. But what do you save because you're retired or not making any money? You still want people to save even when they don't have a job?
I think the key is to think about it holistically. Your retirement plan isn't just the leading up to retirement and then I'm done, I can spend, I don't need to worry about my budget, I don't need to worry about things. I think the key is to really have that be a built-in part of your plan, and to remember that retirement is long. The average U.S. retirement is 18 years. That's a long time to plan for, and that's a long time to still be kind of thinking about your money, thinking about if you have any income coming in, and prioritizing how you're spending that money.
So from an investment standpoint, I think the generic way that we would all frame it is you take more risk when you're younger, and then you take less risk as you approach retirement. But are you saying that instead of viewing 67 or whatever as the cutoff date, it's more like you can maybe begin ramping down at 67, and you need to find a way to make it to 87, because realistically, if you're in good health, you should expect to get to your 80s at this point.
Absolutely. I think you should think of it as kind of that spectrum, and this isn't the end point. This isn't the take everything out and put it in cash moment. This is kind of, start ramping down. You still probably want some of your money in stocks still at 67, 66 years old. That 18 years, it's a long time. And for some people, it's more like 18 to 30 years. So it is a long time period.
Do you think we're too, I guess then, are we too conservative, like as an industry perhaps, discussing strategies for saving for retirement, right? Do we not view the retirement age as a long enough time scale? Like really it's your whole life, not just like the 40 years you work.
The first 40 of work. Yeah, exactly. I think in the past we have been. I think that's changing. I think people are starting to think about that and realizing how long that is and how they really need to factor that in as well. And I think it really depends on your situation as well. I mean, some people will still have some income coming in. Some people will have pensions. Some will just have Social Security. It really depends on your situation. It depends, and it's important to know what your individual situation looks like.
So for the people that are like a year or two out from retirement and they're looking to start changing their investments, how early should they be doing that, and how should they be investing at that point?
Yeah, well, hopefully it's been a part of the plan. Hopefully it isn't just this one moment where you're suddenly making a ton of changes. Hopefully it's part of the plan, that you're thinking about it throughout even your working years as you get closer. Hopefully it's something you examine on a yearly basis. What do you want your retirement to look like? How are you getting there? What are you living off of? And probably it involves talking to some experts as well for the average person.
So you had a couple of ideas that stood out to me that I feel like some of them I've heard before. So just live off the interest. Okay, sure, that'd be great if I have enough. Cover the basics. I get that. But one I really liked is this bucket idea.
Yeah.
Can you run that down for us, how it would work? Because it kind of made sense to me, like if I got to spend that first bucket,
absolutely,
but I would know what my budget was, right?
Right. I mean, I think, interest only is like everyone's dream, right? You have enough money that it's just sitting there and you're living off that. You never even touch your nest egg. It's what you get to give to your heirs, or it's what you get to spend on one final hurrah of, a cruise around the world or something like that, right? We'd love to do that. But I think, the bucket approach can be helpful because it really does split your savings. It's more of kind of how you think about that spectrum of your retirement into a beginning, a middle, and end. And one thing that we do see is that, people start to get freaked out in that first year or two that they're spending too much too quickly. But really, that's when you're still likely on the healthier side. That's when you should be taking maybe some trips and some of those things you've been waiting for. It may be okay that you're going to spend a little more in the beginning. Chances are you're not going to be taking those trips at the end. You may have higher healthcare costs, so you need to be kind of balancing that out. But it really does allow you to kind of think of your retirement in 3 different sections or buckets.
And then where does Social Security fit into all this? Because so often our conversations assume that Social Security does not exist, except it actually still does.
Right. It does, and is it going to exist as it currently is? That's a question for all of us, right? But I think, the best strategy, of course, is to plan for if it's not going to be there. But it's probably realistic to have a few different scenarios. And that's probably how we should all be thinking about our retirement. What am I comfortable with factoring in? And, what if I had 100% of what I would expect to get now? If you're 40 years away, maybe that's less likely. Maybe it's more likely that there's going to be some changes. But, have a plan for kind of different versions of Social Security.
All right. We're all aiming for the interest-only approach.
That's right. Or Social Security.
I
think we're all going to get 100% of Social Security. I think the notion that we have to change it is ridiculous. There's no constituency out there that says, except people who are about to die, that think they should cut Social Security.
I just worry, is it going to be enough? That's all.
Well, let's think about what you can control, right? What you can control is everything but Social Security.
Yeah. Here's how it becomes enough. They print the money.
Yeah.
Then it's enough.
I don't think it's enough right now for people.
Right, so Jay Powell is going to have to call up, say, hey, we need more money, and then they're going to print the money.
Yeah.
When Brian Chung is Fed chair, he will make sure there's enough.
I hope Brian Chung is Fed chair. I will be so happy. AJ Smith, Vice President of Content and Financial Education at Smartasset. Great to see you.
Great to see you. Thanks for having me.